Welcome back to the part 2 of Jade Lizard option strategy. In this video, we are going to apply this strategy in a reversal as well as a directional movement portion of Bank Nifty, right? As you can see in the chart, the portion of Bank Nifty I already marked, which is from 13th March to 24th April. 2023. The Bank Nifty is very bearish in the first half and then it turned very bullish, which is clearly visible into a chart. It moved from one extreme to the another extreme, right? Before moving any further, let's quickly recap the rules of adjustment which is mentioned in part 1 of this strategy. So our first rule is
if movement of the market is in down or up direction and there is an insignificant premium left in break even sell option, then square up that sell option and square off half of the call or put option which is not in line with the market direction at same lot of break even sell side option below 8 delta strike price. If the premium of break even sell option increase to double, then square off it and at same lot in opposite sell option.
our second rule is
if movement of market change after the adjustment, we are again going to square off break even sell option and square off call or put option which is not in line with the direction of market and restore the previous call or put option at same lot of break even same sell side option below 8 delta strike price. If the premium of break even sell option increase to double, then square of it and add same lot in opposite sell direction.
one more thing that I like to bring in your notice is that why it is very important to know the overall direction of the market, and to know the direction of market we need to have a basic knowledge of how to read the charts. And why I am emphasizing so much on this video and in the previous video is because it will decide how much profit you are going to make at the end of the strategy. So a basic knowledge is needed just to tell the direction of market in time frame you are trading this strategy for. So if you do not have a basic knowledge, then you can just watch my video in the description below, which so you will have a basic idea how to read the charts and in which direction the market is actually moving. I will again going to give you a comparison of applying strategy with or without knowing the direction of market. Well, you need to see the whole video so you can understand the importance of why the adjustments is needed and how it is affecting this strategy in a long run. So rest, sit back and start analyzing this strategy. Okay, this is option Opstra simulator, and I actually already mentioned the duration of time in which I am doing this adjustment, which is 13 March to 27 April, and this is our expiry of 27 April 2023. So let's make the strategy first. So according to our previous video how to make the strategy, I am going to make the strategy according to that only. And since we are making a bearish strategy, so I'm going to sell 2 lots. Now I'm going to buy same quantity of lots at the money. Okay, after that we are going to sell below 8 delta. So our below 8 delta is around 6 delta, which is available to us in the option chain. So I'm going to sell 8 lots of strike price 44,000 call. So this is how our strategy look like. This is a payoff chart. Okay, before moving further, let me tell you why I actually selected to have a bearish view, because as you can see in the Bank Nifty, we are actually in a downside. If we just neglect all this portion, then we can clearly see that the Bank Nifty is basically in a down direction. A bearish move is actually currently running in a Bank Nifty. So I decided to make a bearish strategy. Okay, this is a payoff chart. So without any delay, let's move on to our next day and start this simulation of this strategy. As we move next day, we continuously monitor the spot price. So we come to know that which direction actually the market is moving. Okay, the market actually gone down, and the premiums in a call side sell direction actually has gone down also. As in a previous video I already mentioned that we are not going to do adjustment very frequently. We will wait until and unless we have a insignificant premium left in a call sell side next day. Okay, the premiums are still there, so we are moving toward to next day again. The premiums are only 27 rupees, so still there the premium left, so I am going to go for the next day again. Okay, only 31 premium left, still there is a premium. I am going next day. 23 rupees, still premium left. I will not square up this position until unless it is around 15 rupees. Next day only 21 rupees, still going to wait for few days until unless it is 15 rupees. Okay, now the premiums are around 17 rupees, and we clearly see that the market actually gone downside. So we are going to do the adjustment according to the direction of the market. First, we are going to square off this position, 17 rupees. Now, since the market actually gone down, so we are actually squaring off this put sell option. We are going to book this 14,300 rupees loss. Now, according to the rule, we are going to add the call, say 8 lots, and that's it. So the premiums actually I'm going to take is around 5 delta. The premiums I'm going to take are very low. So I'm going to tell you one thing is that if you are going to decide which premium are you going to take, then you should always see that if you are going to double the premiums, then how much loss you are going to take when the premiums got double, because when the premium got double we are going to square off this position. If we are going to take this 44 premium, then doubling it will be around 88 rupees, which is around 4 to 5,000 rupees loss, or even more, depend upon quantity of lots you actually selling. So because of that reason I'm going to sell only 28 rupees premium. Okay, this is how our payoff chart looked like after adjustment. We are at around currently making 2,780 rupees profit. So let's move on to our next. Okay, Bank Nifty actually gone down again, and our premiums are around 18 rupees only. So I'm not going to square off this 18 rupees. I will wait one more day so I can get even more or less premiums. Okay, now it is around 15 rupees. So now we can see there is not much significant premium left into this strike price. So I'm going to square off this position. And one more thing that we need to notice is that our movement of the market is basically in up direction when we are actually doing our adjustment. Because of that reason, we are going to book this put buy position, and we are actually currently making 50,000 rupees profit in that position. And after that, we are going to again sell one lot of put sell position, which we actually squared off in our last adjustment. So let's do this adjustment. First, I'm going to sell 8 lots of call sell, which we actually booked around 15 rupees. So I'm going to sell around 24 premiums only. After that, I'm going to add for this position again of 41,400 strike price, that I'm going to sell one lot of put in the money. I am going to square up this put buy position, which is currently running at the price of 1423 rupees. Okay, all the adjustment has been done, and we are currently making total overall 10,855 rupees profit. And this is how our payoff chart will look like. As you can clearly see that the direction actually changed from a bearish to bullish almost. So let's move on to our next day. Okay, we still have a premium of 21 rupees, so I am not going to do any adjustment today. And let's move on next day. As we can see that premiums almost got double. We actually sold at 24 rupees only, and currently the prices are around 44 rupees, making a loss of 3,860 rupees. I'm still going to wait and see how the market actually react. If it is going more than double, then I'm actually squaring off this position. So let's move on to 30 minutes time duration and see how the market actually responding. Again 30 minutes. Okay, around 1 o'clock, 150, we can see that the prices are almost double, almost came down to 50 rupees, which is more than double the price of this premium. So I'm going to square off this position around 50 rupees, and I'm currently making 5,000 rupees loss. And after that, I'm going to switch my position from call sell to put sell. I'm going to sell the same lots, which is 8 lots. Since this is the first position from the put side, so I'm actually taking a little bit higher delta value, which is around 76 rupees of premium, and it is less than 8 delta. Now, as you can see, our payoff chart will look like this, totally in one direction. So let's move on to our next day. So we still have a premium, not much decay. Let's move on next day. 40 rupees of premium left, 28 rupees still premium is there. Next day, 20 rupees, 15 rupees. Okay, now we have only 15 rupees left in the put sell side, and market actually gone up. So we do not have to change our direction. We just need to do is to book this profit and again sell the put side. and we are currently making 58,738 rupees. Okay, I'm not taking a lot of risk in this position. I'm only selling 22 rupees premiums. So even if the market actually gone down and the premiums actually rise, then I'm going to scare off my positions around 44 rupees only with taking a minimum loss. Okay, one more thing that I like to bring in your notice is that while I'm doing this adjustment, I realized this that my in the money premiums are very low. Okay, this is my personal advice that I like to give it to you is that if there is a momentum in the market, as we can currently see that there is a huge movement in the market and the market is actually going very bullish in one direction. In that case, if there is a less premium left in the money, we are actually adjusting it as per the movement of the market because there is a less premium and there is since there is a less premiums in our in the money option, the profit which we are actually taking is actually not there. So what we need to do is to add more premiums in the money option. So I am going to square off this in the money position which of the two lots actually which I took previously and I'm going to add more premiums. Okay, there is a no rules and regulation for selecting any a particular strike price, but actually I am going to add 1000 rupees of premium again since we need premiums to adjust the movement of market. You can select any strike price according to your analysis. Now after adjustment, this is how our payoff chart will look like, and as we can see that even if a market actually gone up again with a very good momentum, we still able to adjust that and we still going to get more profit. So our maximum profit is 1 lakh rupees, 8,472 rupees. Let's move on to our next day. Okay, as you can see in our next day, our premiums actually gone down and I am actually come down to 15 rupees premium. But now since market actually came down to almost our expiry day, which you can clearly see there is only 10 days left in our expiry. So the because of that, I am not going to do any more adjustment around 15 rupees. We are going to go below 10 rupees. Then only I am going to do adjustment. So let's wait again. Okay, now our premiums are around 10 rupees. Now I can do our adjustment and you can also see that the in the money which actually we sold our premiums also gone down almost around half of the prices. As we can see it is almost reach around the top of the maximum profit. So I'm going to add again more premiums if in our next adjustment if the premiums actually gone above this strike price of 42,400. So let's currently make this adjustment by squaring of this put side 10 rupees. Since this market actually gone down and so we need to do our adjustment in the direction of the bearish move. So what I'm going to do is I'm going to square off one of the put sell option which is of a rupees 417 rupees and I'm going to add put buy option. So I'm going to restore this option of 40,800 rupees, which is a 43 rupees premium. Let's go to options chain. First, I'm going to add this put side position of strike price 39,900. One thing that you need to notice is that even though the market actually gone down, I still did not switch my position from put sell side to call side. And you do not need to switch your position until and unless you hit your stop loss. Moving on further with our put buy position. So I'm going to buy the position of 40,800 of premium 43, one lot only. After the adjustment, this is how a payoff chart will look like. And let's move on to our next day. Market actually gone down again. There is a decay in a premium from put sell side. Let's move on to our next day. Okay, market actually gone up and the premiums actually gone down and we are around 7 rupees only. So I'm going to do the adjustment since the market actually gone up. So the strategy is basically not in line with our direction of the market. We need to do our adjustment again. So we need to square up this buy position, put buy position, and as well as we need to add one put sell option. So let's do the adjustment. First I'm going to square up this one 17 rupees. Then I'm going to square off this put sell option of break even put sell option 7 rupees. Now I'm going to add the positions. Okay, I am actually selecting this 40,500 strike price, which is around 12 rupees of premiums only, very low premiums. Since I am actually selling very low premiums, so I will wait very long. Now it's time to sell put sell option. Since we need to sell an in the money option, so I'm going to add again 1,000 rupees of premium, one lot, just to compensate a strong move in up direction. So this is how our payoff chart will look like after the adjustment, and we can clearly see that we are actually going to make 1,27,000 rupees. So let's move on to our next day. There is only 5 days left in our expiry. Okay, the premiums actually gone down and they are around 7 rupees, but I am not going to square off those position. Going to wait until unless premiums goes below 5 rupees. Let's move on to next day. Now the premiums are around 5 rupees, so I'm going to square off this position. And since the market actually gone up, so we are basically in line with our direction. So we do not have to do any more adjustment. We just need to add call sell position. Again, I'm going to sell around 13 rupees premiums, 8 lot. Moving on to our next day. So there is around 8.7 rupees premium left. So we are not doing any adjustment. Let's move on to the next. Okay, now only there is a 3 rupees left. We are going to do adjustment. And as you can see, the spot price actually gone up. So we do not have to do any more adjustment. Just need to add 8 lots of put sell. One more thing you need to see is that there is a almost negligible amount of premium left into a put position which we sold in the money. So I'm going to square off this position also and going to sell one more put option at around 43,400 strike price, which is 564 rupees of premium. 25 rupees. Okay, after the adjustment, we can see our payoff chart will look like this. It is totally in a one direction and there's only 1 day left. So let's directly move on to 3:30 and let's see how much profit we actually making. So all the premiums actually gone down to zero and we are currently making 1,25,000 rupees profit, and this is our payoff chart. We can make maximum profit of 1,44,000 rupees and we are actually making around 1,25,000 rupees profit at the expiry day around 3:30 p.m. As in the beginning of the video I actually told you that I am going to compare my both the views, bearish and bullish views. So this is our bearish view, and as you can see that in the bearish view we are currently making 1,25,000 rupees. Now I am going to show you how much profit we are going to make if my view was bullish, which is totally not in line with the direction of Banknifty. As you can clearly see, we are in the down direction. So I'm not going to show all the adjustment and rules. So I'm just going to show you a final payoff chart and the profit. So let's get to that. This is a payoff chart will look like for a bullish view, which I actually told. And I'm currently making only 36,592 rupees only. So this is what I'm actually talking about. If your view is actually wrong, then you are not going to make any good amount of profit. So that is the reason why I was actually emphasizing that you should know about charts and your view should be correct. If your view actually was in a bearish move, then you are actually making around 1,25,000 rupees profit. And if your view basically was bullish, market actually after some time gone up, even though you are almost making only 36,592 rupees profit. That is the reason why I told you your view according to your time frame is very important. So before ending this video, I would like to share very important information if you are fail to realize it, that you have to select low premiums around the previous square offing premiums after hitting your stop loss. That is, the premium of a break even sell option got doubled, and this is for the reason we could actually do our adjustment as soon as market changes direction, so we could make more profit by entering in a correct position at a correct time. Okay, this is all about this strategy. I hope you understand this strategy, and as we have already learned that this strategy actually perform very beautifully in a directional move. The only condition is that you need to know the direction of the market in which direction actually moving. So if you know that it is a bearish and you apply the strategy in a bearish view, then you can actually gain a very good profit. And if you are actually incorrect with your view, then you are going to get a decent profit but not a very huge profit, as we can see and compared in this video. So if you are willing to see more such kind of video which are related to option strategy, you can stay tuned with this channel. This is it for this YouTube video. Thank you very much.